January 8th, 2020, after the market dropping, it is certainly recovering all of the losses from yesterday. So the market does not seem to be concerned. Why? Well, because everybody thinks, for whatever reason, that Iran is done with the response. And everybody's discounting the fact it could be just the beginning. Now, knowing the history of Trump making certain military-related decisions, they typically come on Friday afternoons after the market closed. So with that said, we're readjusting our stance on the big market drop, targeting Monday, January the 13th. So expect a big move lower in the markets after they close on Friday. So unfortunately, that rules out a lot of the weekly option trades. But nonetheless, something sooner than that could potentially happen, but expect an escalation in this conflict to actually peak this Friday after the market close. So with that said, we definitely want to cover this Monday, January the 13th drop, because the market could actually get down substantially, and not recover that very day as it's doing today. So we're going to take a look at the VIX. We're going to take a look at a few other charts here, guys. But the most important thing is VIX is likely to attack that 16 level again and again. And these moves are likely to be happening after hours. So the two sectors we want to target are semiconductor sectors to buy puts on those, and travel stocks. Most war-related decisions, again, by Trump, they're coming after market closes. Most of the biggest decisions that he's announced that impacted the market, they come after market close around 5, 6 p.m. So with that said, make sure that you do not close your positions overnight. Make sure that you do swing trade. Make sure that you do keep these positions and don't close them intraday, because some of the biggest moves this week and next week will be happening after hours. So yesterday we actually got a move 6, guys. Very important with these move 6 top situations. Okay, when we start appearing 6s and 11s, we get very close to a substantial move lower. So the tunnel looks like this after the drop yesterday. The actual moving average of the tunnel is now lower. So we've set 3181 was the lowest in S&P 500. Right now, pre-market, we're trading about 32, 40, 32, 39. So we potentially could move back to this yellow line, like 32.50 when the market opens. Or maybe 32.45. Use that area and start buying puts pretty much in the first half an hour within the market open. So between 9:30, 10, add some more puts, about 10-15, guys, because ultimately, after attempting one more time, the market is getting weaker. It just recovered from here. So the probability that it's going to jump over and reach all-time highs in the next few days is not good. But the probability it's going to touch that upper tunnel range again and then move lower again is highly likely. So we're targeting 3181. Getting in right here, guys, that's a 70-point drop in S&P that we're likely to see materialize over the course of the next 48 hours. So use this very attractive entry right here. Target this area to exit out of your positions. Now, Monday, we could actually see S&P 500 drop all the way to 31. That is our projection. Based off the moves, we're going to break down the sequence. It is very likely to happen. So compared to yesterday's levels, you see we were at 32.06 now. That lower part of the trading tunnel has shifted, giving us a higher probability of a move lower. And more importantly, when it comes to actually profiting on these put options, is now you've got a greater magnitude that is cooking, that is in the making. Nothing has changed since yesterday, right? This stop continues to deteriorate in the general market. And we just want to identify the top sectors to short, which currently it is going to be the travel sector. So highly focus on this BKNG trade. The easiest trade you can probably do is split your position between buying BKNG puts close to the money, like 2060, 2050, 2070 strike puts for this week and next week. The stock is getting weaker and weaker. On the buy volume, it barely trades on any type of volume. Most of the volume in the stock in BKNG is coming in on the sell side. And not only that, the most important thing yesterday, before the market tanked after hours, I was noticing that all of a sudden there was a spike in activity in buying BKNG puts around the strikes of 2010, 2020, 2030, when it was trading at a 2070 level. So some people are really paying attention to the fact that BKNG could make a rather substantial move, 70, 80, $100 move, guys. So it is recovering pre-market. Looks like it's tracking to open around 2065 level. So could it pop back to 2070? Sure, but use that as your entry point on BKNG. Okay, AVGO, nothing has changed. We're really ready to break this move lower right here. So BKNG, we just talked about that. So there you go, guys. Easy trades right here. Just focus on them. You don't need a ton of trades to lock in some really good gains this week and next week. Just focus on this semiconductor and travel stocks. As far as the moves, very important stuff is happening. Yesterday, on January 7th, we actually got a move 6. We've not had a move 6 in a while. Now, you should know, last year when we nailed the market crash, we had a strong sequence of combinations between move 6s and 11s. So we've recently had some 11 moves. 11 has been the prevalent behavior as the market keeps climbing higher, basically signifying that the top is here. This is the top. This is the top. Now we're starting to get in the mix some of the 6s behavior. And the 6 behavior is basically a market somewhat positive. It doesn't look like it wants to drop, but look what happens at the very end. Boom, you got a huge spike in volume, which is a characteristic of the move 6, and you got a quick move lower right in the last 30 minutes of the trading session. So when you see this, typically it is the follow through on that is going to be a gap down or a huge drop, which we did get a huge drop, but we got also a quick recovery, which is fine in the meantime, which is getting us closer. We can buy these options at a much better price today on the put side on this bounce. So the 2-day sequence is 4-6, guys. You can see how quick that 6 move is at the end of the day. So 4-6, huge shift in the behavior here. 5-day sequence 4-7, 11, 4-6, which you're really seeing here is a triple top formation that we've talked about on the longer time frame chart on the S&P in yesterday's video. But it's clearly, to see that, hold on. Yes, we bounced, but the market is really stalling right here. There's just not enough energy in the market right now to take out this 3260 level and break out higher to 3300. So the higher probability is that the market is going to retrace back to this level over the course of the next 72 hours, possibly lower, then maybe gain some momentum and maybe stall out about 31 level. So keep that in mind, that all of these entries around this triple top formation, they're great entries on the put side. Next market move for today, guys, we're expecting the market to, once the market opens, continue moving just a bit higher and then begin to sell off. So your ideal entries are going to be, while everybody's still thinking, oh, it's a recovery, the market don't care about anything. And then later in the day, you're going to have questions like, well, hold on, is it really over? Is Iran done? Or is it just maybe a temporary move while they're preparing the bigger move? So all of these things that will resurface, things could escalate rather quickly. Now, if you study the history of the wars, most of the time you do get a short-term move lower, followed by an overall move higher in the war-type situations. So this is something that is definitely useful for trading weekly options on the put side. However, long-term perspective could still be that the market could be moving higher over the course of the next couple of months. But with that said, in the meantime, targeting this Friday, targeting this Monday, we want to stay with the put side. VIX is neutral compared to the prior day. Basically, we got 2 days in the VIX where it's trading between 14 area overall, the average. So it's likely to easily reattack that 16 level. It certainly got close to 16 yesterday after hours. But the most important thing is this. Just like we're noticing this very well-defined trading tunnel range in the S&P, we're also noticing the same type of trading tunnel in VIX. So anytime we get to this 13.25 on the VIX, basically this red line of the trading tunnel, you want to buy VIX calls. Then you want to be cautious once it gets closer to the 16 level, because that's the area that has failed now twice. Now ultimately you want to hold on to these calls if it does break out strongly above that 16 level, which again could very likely happen on Friday afternoon. So Monday we could be waking up and the VIX could be at 18, 19, guys. So pay very close attention. If it's getting back here by the end of the day, 14.9, 15. This is something definitely to be paying attention to, because the market is changing its mind what's it going to do short term. So the key takeaways are short semiconductor stocks and short travel stocks. AVG or BKNG still our favorites. Buy S&P, buy Qs, buy puts on those, and buy more puts at this triple top. Okay, target big drop Monday, January the 13th. 13 market moves are pointing to a big drop on Monday, the 13th. That should not be taken lightly. With that said, guys, trade like a rockstar. I'll catch you on the next trade soon.
Can't you see that